I want to do a brief recap. First of all, if you're here with us right now, you're either a user of prediction points or you're on a trial for prediction points. And want to just say a couple of things about that. And one is that if you really will listen to and get what we're outlining here in this series of 4 trainings we had last week and then this week, and we have 2 more weeks to come. And if you'll really set aside what you think it already is or what you think you already know about it, I'm telling you that it is way beyond that. I'm not the inventor of prediction points. I purchased it from the original creator, and we have morphed it into what it is today, and we're continuing to work on it and continuing to make it better. And I've been trading with prediction points since 2007, and first time I started trading was in 2006. I started in futures. Aside from buying Tesla at $45, I really haven't bought much or done much with stocks, and I've traded options a little bit, but futures has really been the home for me. And for the last decade or so, it's been the S&P 500. That's definitely my primary focus. So I want to do a little bit of a recap of what we talked about last week, and then I'm going to talk about today. One of the things I want to make sure we cover is, if we understand what we covered last week about why we're trading at what prices, I want to talk to you about what we're looking for in a trade. And it's actually, I don't want to make this like I'm overstating it or making it seem like it's really simple, but it's really simple. And one of the things that gets in the way for traders is all of the internal talk going on while we're trading. And we'll talk a little bit about that today. But I want to talk about yesterday we had the big drop all the way down here. And then I want to just look from the very bottom here on the way up. We use this term in the chat a lot. We say something is used, and really all we mean is whether it has been tested as whatever side we're on of that. If we're above it, it's been tested as support, or it hasn't been. And if we look right here, we have this was tested as support right there. And then this was tested as support. I'm using a 5-minute chart. That's probably the best way that I would determine that. And then this was tested as support. And then this was tested as support. And then this, I'd say this is close enough. It's sort of consolidated around here. I wouldn't expect much anything down in this area if they came back here. This broke. This was tested as support. There's a pretty good reaction out of here. We're going to talk about what this means. This is maybe something to keep an eye on, and it's also a CP, so that's important. And then this was tested as support, and then this was tested as support here, but then it broke down below it. Now that resets it. And when it came back up over here, broke and came back. That's 73. That swing right there is 71.25. I think that's probably close enough. I wouldn't necessarily be going crazy about buying anything here. And then this was right leading up to the open. This swing right there, and then you have this right there, and this is the candle right before the open. It's 6:30 my time. I'm in Paradise in California. And that's basically what your chart would look like if you went through and removed all of the everything that leading up to the open, everything that had been tested as support already. I want to show you what your chart would look like. I had this all ready to go, and then I had to actually get NinjaTrade, or I had to quit and restart everything. So but I want to give you this visual. I could just explain it to you, but I really want you to get the visual of it, okay? So if you marked off everything here that was already used, as support, the only questionable thing that we would have here would be that 55 area. And given that it's a CP, it's probably worth respecting. We'll talk about what we would look for if they came down in here. And this is basically what we're looking at right here. We have this one up above. I'm going to take that off. This is, so you have all these prediction points that played out overnight. Now, if you're looking at my chart right now, what you're seeing is price on a chart with 4 blue lines. And those happen to be critical prices. And if the market were to, I mean, this to me just looks like they came up over here, it stalled out, it came back, it hung around here. Usually this is going to be enough to get a breakthrough. They broke a little, came back. Yeah, I would like it if it looked like a break like that and then a retest. That would be nice, but it didn't look like that. So we'll talk about how we would treat this, but this is almost, you know, one of the things that I've done in the past. I will do something like this and I'll make it like a dash because it's sort of already tested, and it depends on how price comes into that level, whether I'm going to do anything there or not. And I'll talk a little bit about that as we get going here. So here we have, right here, we have this where the market is about to open. It's trading at 33.8150. And we have this price up here that the market kind of just cut right through on the way down, but there was a lot of trading activity over here before. So we saw they came, I mean, look, they came down here, tested over here, tested right there, tested there, finally broke it, came back, tested it. And then of course, when this news came out and we had this reaction, it just went right through it. And we can see this has been an area of interest, so worth keeping our eye on it, but probably mostly used up, I would say. Maybe, depends on how price comes back, and we'll talk about that. So if I come in here in the morning, just going off of what I've done, and I want to, rather than just try and get a whole bunch of information out there for you, I want to make sure that you're following. So we're going to pause. And by the way, this is not meant to be entertaining. There's been some funny comments at times on our YouTube videos, and they say, your videos are terrible. Okay, great. We're not trying to entertain you. If you want to pop popcorn and be entertained, I'm sure there's funny cat videos somewhere out there. This is not that. I want to make sure, and I'm teaching one to many, so I want to make sure that you're actually getting the principles behind what I'm talking about. So what I've done is I've loaded all the prediction points on my chart that originally looked like this, and I removed all of those ones that have already been tested as support. And then I had one right here that was resistance, and I removed that one that had been tested as resistance right there. So this is really opposite of what traders, when they talk about, they say I'm a support and resistance trader. Yeah, that's what we do too, except we trade it before it's support or resistance. So if you can already see that it's support or resistance, I'm probably not interested in trading there. It's that likely already played out. I don't really want to do anything there. So that's what I have done. There have been a lot of questions of how do you decide which prices to trade and which ones not to trade and whatever. This drop yesterday, everything had been tested leading up into this drop. Everything had been tested down here. And so, yeah, when it comes through here, this is, if you look at yesterday, these are today's prices, but this big drop through yesterday, yeah, everything had been tested except for that 73 area, and it kind of bounced a couple points in front of that and then came down here and came back up there. That was not going to hold it up. That's a KP in the middle of two CPs. That's not going to hold this thing up, not when it's selling off like that. So, you know, if you go back and you look at the chart, you're going to see, yeah, this area made a lot of sense. And we even said in MAP, we said that back down to the 3330s was very possible before this thing was over. And then there was that move down to 3330, 3330 half, which was the CP yesterday to the tick. You can see that as things do tend to change from day to day. This actually moved up a little bit today, which really wasn't important. So all I did is I removed all the prices that were already tested. That's all I've done. that clear? That's what we're looking at right here. And then given that, David, I'm assuming if something isn't clear or whatever, you'll interrupt me and we'll, address it. Or if there's a question you think we want to answer, in real time, then let's do that.
Yep.
So really, this one is very iffy. I'll talk about how I would treat that. That's very iffy as to if I would want to do anything here or not. Maybe a bounce from here and see if it can turn into something more. But given that the market trades from blue lines to blue lines, I have really no support anywhere below where the market's trading right now. And I have a consistent movement up in the market. It's been moving up and moving up and moving up and moving up. So if it starts to sell off, guess what? It's going to go back down to here. But an object in motion tends to stay in motion. And this move continued to just go up here all night until we came in here to the open. And coming into the open, what are we looking for? Well, probably going to just keep grinding higher. We've got this CP and we've got this CP. And why would we keep going higher? Because a break lower would be really major. So if we go back here to what it actually looks like with all the prices on there, a break here would just be really, really important. If we see, okay, here's this, maybe we could see kind of a wick down to here. But other than that, that 72 area, that better be it as far as if we're going to be buying for the big picture. And I want to build a big picture approach to how I'm going to come in here. So unless, I mean, really, I might just see this thing go straight up. I might see this hold right there. I might see a wick down into there if there's some volatility. And I want to ask a question coming from yesterday. What do you think people started doing when this was happening yesterday? What do you think the positions were in the market from retail traders? What do you think they were doing? Any idea? You think retail traders were buying this down here? Or what do you think they were doing? And remember, we're trading the futures market, so this is representing 500 different companies. So you own one of these companies, and a lot of retail traders are like Chicken Little. They're running around waiting for the sky to fall, and all of a sudden it looks like the sky's going to fall. And I don't know, but I'm just curious. I mean, do you think these guys are getting long, or do you think they're getting short? And if I was betting, I would bet they're getting short.
Yep. Most people are commenting. Right? Yeah, most people are commenting, jumping on the train, getting short, getting stopped out. There's a few people that are saying buying the dips.
Yeah, but they're probably doing that over here where they can't. They're probably buying the dip over here where they can't take this kind of risk, and then they're getting stopped out by the time it's down here, right? I'm guessing that the majority of retail traders positioned themselves short yesterday when this started happening before the close. Coming into the close, I think you're getting this bounce coming over here. I think they're thinking, I'm going to get short. Now, you're talking about stocks that are not trading overnight, and the futures are obviously, still trading overnight, but that doesn't do you any good. If you're short one of the stocks in the index and the stock has gone way up overnight, what do you think is going to happen? As soon as the market opens, all these buy orders are going to come into the market. Okay, so it's a little bit outside of what we would normally talk about, but I just want to give you, there's a lot of moving pieces here. You cannot try to cookie cut this. It does not work that way. The markets just don't work that way. So I thought, yeah, the maybe you see a wick down, but probably a lot of traders that were short, and they need to cover their shorts. And I think that's what we saw right here initially. A lot of traders also tried to short this on the open, and that was to no avail at all. So basically, if you look back over here, this is what I'm looking at coming into the market this morning. If this thing fails for going higher, it's going to get ugly again. And I don't plan for those types of events. I mean, I know they can happen, but I don't plan my trading around it. I don't plan my trading around, I'm going to plan on there being a 100-point sell-off today. Now, if the market's doing that kind of thing, that's fine. I'll certainly trade it, but I'm not planning on it. The buyers stepped in down here. It made a lot of sense. It was right off the CP and then drove this thing all the way back up here. So that's what I'm looking for. And then really, can they hold this maybe 73 area? So let's jump back over here. So we just want to see if you're, if you're getting that why is it so likely that it's going to just keep going up? This is not just today. That remember what I said last week, we're teaching principles that are applicable day in and day out, not for one trade or one scenario. But here we have this. And to just illustrate, I'm not going to pull it up and show it because I don't know where it is in our conversation, but David and I were having a conversation yesterday about 10 or 11 minutes after the market closed. And David, what did you say about the whole move down?
I said it's all going to retrace tomorrow.
Yeah.
Bottom probably be 30, and it will all retrace by the end of the day tomorrow.
He said maybe we go down to 33.30, but we'll retrace the whole move by EOD by the end of the day today. And that certainly happened. We basically retraced the entire move down by the end of the day today. That's not because he's a good guesser. That's because there's a methodology behind here. And if you really understand it, you can start to see, okay, they're coming down into here. And then where does the market go? Well, it goes up here. What did we want to see? Well, if we go up here, there are a couple of things that what I was personally looking for. I wanted to see, could we get any sellers in this area? If the sellers were going to drive it down, where's it going to be from? It's going to be from here or here. Or let's check out this area if they come up to there. But above here, we're really looking for a move up to there, right? So these are like good scalp opportunities, possibly, given that we kind of just blew right through it. And again, we're going to get to that. But so what happened? They came 91.75, missed that by 2 ticks. We were trying to put a short on there in the live trade signals. So we missed that by 2 ticks. That is what it is. And then it ended up coming down here a bit. Now the next move right here. So look what's happening. Everything's holding. We're holding up above the CPs. And any of our MAP members will remember what I said this morning. I said if we are able to break up above the CP. Now, does that look like a break? That sure looks like a break to me. And so we break out up above the CP right here. And I said, and then as long as we can hold that, we're going to be fine for moving higher. Well, where's our next CP? Right there. It's not that difficult. Where's the market going? Well, to the next blue line. That's where it's going, right up to there. And that has been working day in and day out for so many years. It just seems like common practice to me by now. And so what happens? They end up pulling back. Would you call that holding? Yeah, I'd call that holding right there. Within a tick of the CP, that holds. And then what did I say in the live trade signals? I said, so this is not really a break. Yes, the price broke. Technically, it's a break, but it's not the most convincing break, is it? So, not a real super convincing break. Also, if you watch the training videos, what would you call this? You have 96, you have 92, and you have 88. So you have 3 prediction points within 12 points of each other, basically. And what would you call that? Sorry, not even 12 points, within 8 points of each other. What would that be? It's a particular kind of cluster. You could argue that this is also one, or maybe this is all kind of part of it, how close these are together, which certainly was the way the market moved overnight. It just kind of, this grind up overnight. So if you watch the training videos, if you don't know the answer to that question, if I say, what's this right here, and you don't know the answer to it like that, you got to go back and watch the advanced training, because that answer should be right there off the top of your head. This is a congestion zone right here. These three prices close together. This is the checkpoint. What does that mean? It means when we break out of this congestion zone, where are we going? Right there. And what are we looking for? We're looking for a reaction here. Look, there's no price action here. We're not reading price action. We're forecasting price action. We're predicting it. We're not looking at the candles and saying, if the candles do this. We're predicting this type of movement in here, this choppy, this consolidating, this kind of thing. This is predicted by these three prices being here together. And I'm not making this up today. We recorded this in a video years ago, and it's on the members area, and you can go watch it. So, and this works day in and day out. So this is a congestion zone. It's likely that the market's going to consolidate around inside of here. Congestion zones have a checkpoint, and that is the checkpoint. And what we know from a lot of history with this is that if the market moves strong out of this congestion zone up above here, which is what we're looking for, given that there's basically no support anywhere down here, we're looking for, yeah, I'm telling you something. I'm telling you.
So even there's a really simple question that comes up, and I think it comes up frequently. Is how do you know if it's going to the blue line above or below?
Well, are you above or below the blue line? You know, it's pretty simple. I mean, look, you don't have to know. I think I would just say this. Look at this. We'll just go like this. So are we above this blue line? Yes. Until it goes above that blue line, and really this one, because these are both right here together. So until it goes above here, you can have a short bias. You know, that's fairly simple. And then this holds eventually, and this holds for higher. And this is not like I've picked out some perfect scenario. It came down to here. You can have a long bias. From here down here, this is a long bias. Where's it going? Back up here. Below here, you can have a short bias. Then it breaks up above it. Where's it going? Now you have a long bias. Where's that next movement going? Well, from 55 up here to 83, 22 or 23 points up here. So which price are we above? We're above over here. Okay, great. Then I want to trade for up to here. Okay, we're below here. Great. I'm going to trade for where? Really, this is already tested. This is already tested. This is already tested. Maybe not this is tested. So if I'm here, maybe I'm trading for here unless things really start to get ugly. Then I'm looking for way down lower here into the 20s. That's what I'd be looking at on that. But as long as we're above here, I'm buying for higher. And if we're below here, I'm selling for lower. And there's some nuances to that, and I think we'll get into it a little bit. But so I told you guys I was working on a PDF that was going to outline this stuff. That PDF is becoming a book. And I actually just wrote this chapter of the book this last week. And so, you know, specifically talking about this and explaining it. So we'll break that down a little bit here today before we wrap up. So really simple. Are we above these blue lines? I know that's really, you know, that's really tough. If we're above these blue lines, and it's a really valid question because it gets asked all the time, where are we going? Well, we're going to the next blue line up there. Well, what about, yeah, still going to the next, well, what if, yes, still going to the next, well, what about, yes, still going to the next blue line up there. Okay, and I'm going to get into the nuances of that in a minute. We're above this blue line, go into that blue line. Above this blue line, go into the blue line up there. That's really, it really is that straightforward. One of my mentors, kind of a funny story. I wanted to learn. I knew a bunch of guys that were trading with this guy, and he, his education, it's $32,000 for him to, you go to his class, and so you pay him $32,000 and you go to his class, and he'll teach the class for 3 or 4 days, and then you can be in their trading room, and then if you have any questions, he'll answer your questions for you. And I knew a bunch of guys that were just absolutely killing it with this guy. And I thought, well, what the hell, I'll go see what it's all about. So I pay him the $32,000. I get on a plane, I fly out to Florida. I go spend 4 days with the guy. And it was the most disappointing experience of my life, I think, up to this point. I could tell you the entire strategy that he's using. I could write it on a napkin, and you could learn it on Google for free. And here's the thing about this guy. He probably makes about $3 to $5 million a year trading stocks. And I'll tell you what he's really, really, really good at. Keeping his losses small and letting his winners run. And it was really, I'd heard that a million times, I think, as a trader. And it wasn't until I spent time with him that I really got it. And he would show examples of 9 trades in a row where he lost, and 1 trade where he'd make 3 times what he lost, and what end up, with a huge profit. And so for me, I really got that. It was not the strategy. The strategy's terrible. I wouldn't teach it to anybody to use it. It's basically moving averages and a MACD. That's the whole strategy. And I wouldn't recommend it, but he's really good at limiting his losses, and he's completely unemotional. I mean, the guy will put 5,000 shares of Amazon on, and he just doesn't even blink. So that's, one of the things that I learned from him. And we've all heard that saying, but it really is that important. Anyway, he told this funny story. He has the same kind of approach that he teaches an end of day trading strategy for swing trading, and he has a day trading strategy. And he said when his son was in like 4th grade, he taught the class how to swing trade using his strategy. And it's really simple. It's like you have 2 moving averages, and if they're crossed up and the price is above them, you're long. And if it crosses down and it's below it, you get out. And then he has a criteria for how he picks those stocks that are on his watch list. And he said he taught him the strategy, and then 5 months later he went back and he set everybody up with a practice account. And then 5 months later he went back to see how they were all doing. And do you want to know who performed the worst? These are 4th or 5th graders. The teacher had the worst performance out of everybody. He also said about once a week, the teacher would call him and say, well, what about if this happens, should I do that? And he would go, well, what did I say when I was there? And he'd say, well, you said to do this. And he'd say, okay, then I'd just do that. So about every week, the teacher would call him with a question about something. And then he would, at the end of that, finally at the end of that time period, 4 or 5 months or whatever, the teacher had the worst performance of everybody. So there was an interaction I had with one of the traders in the chat room, and I said, listen, you're just trying too hard, and hopefully you're here. I can't remember who it was, but hopefully you're here today. But it's like, you're just trying too hard. If you just were not trying so hard, it would come a lot more natural. It's a lot easier when you're not really trying and struggling. And so wherever you are with your trading, I mean, if you're consistently profitable, I'm preaching to the choir. You already know that trying hard is the enemy of success. And so, all right, so let's jump on here. So look, it's really that simple. We could try and complicate it if you would like. We could do something like that, but I would just say the simplest thing would be above these blue lines, we're going to go to the next blue line, and below these, we're going to go to the next one. Now, have we already been here to test that? Yes. Have we been here to test that? Yes. Have we tested that? Yeah, more or less. Have we tested that? Yeah, more or less. Okay, where's the market going? Probably higher, or it's going to break down. Now, this is interesting, I think. It's like, it's going to spike up through the level. And this is the kind of thing that I start to look for when I want to take a trade. But this better get the follow through. This better get more selling coming in here. And then I'm in the back of my mind going, okay, we're coming into the open here. I bet every retail trader and their mother got short yesterday. And I bet they're all going to have to cover their shorts this morning when we open, and this thing gaps up 50 something points. I bet they're going to have to cover their shorts. I bet that's going to create a bunch of buying. So here's the buying. And then where are we going? Well, pulls back to right here. I don't know how, this is what I call market logic. And some of you that have been around a long time know, because I've been talking about this for a lot of years. The market is testing these prices sort of in a sequence. And it looks like this kind of stair step pattern. So I am always looking at sort of where's the next, logical place that the market can pull back to or bounce to, and then not break what I would call the logic for continuing in that direction. So what do we have? We have a clear break of this price. That's a break, in case anyone wants to know what a break looks like. That's what a break looks like. That is a probe. That's great if you're going short. That's bad if you're going short. So there's your break, and then it pulls right back here within a tick. And you just, I know you probably know this already, but I just want to remind you, we gave you this price before Globex opened yesterday. You had this price, and it pulled back here within a tick. If that doesn't blow your mind, if that doesn't tell you that the market is not random, that we had the low, we gave you this low over here, this CP down over here, yesterday's low to the tick. Okay, that's hours and hours and hours before. And it wasn't like a random line somewhere. It was one of the only prices anywhere around there, and it happened to the tick. And it was also a CP, which we know is a target and a very good potential reversal area. Okay, so
can you just do the explanation of a probe versus a break?
Yeah, we're definitely gonna. Yep, I'm gonna dive into that. So that's a great. Yes, yep, we're gonna definitely get to it.
Okay, great.
We're gonna talk about that for what you're looking for when you're actually in a trade. What I'm hoping to get to communicate right now is that when you're looking for somewhere to trade, there's just not that many places that you'd really want to put on a trade. And then there would be types of trades. So there's areas where you could go, okay, I could probably scalp something here. And for me on the S&P, a scalp would be, if it doesn't have 5 or 6 points on the other side of it, I'm not touching it. I'm not interested in that. So a scalp would be, at least 5 or 6 points, and then maybe even more than that. I said to David, I think yesterday, I said, I love these markets when you can be wrong and make 20 points. So, that's a scalp trade. When the market drops 80 points and you can get 20 points on a bounce, that's a scalp. So I know I always know what kind of trade I'm doing. Am I scalping? Am I putting on a longer term trade that I might end up swinging longer term? I know that kind of stuff. So I'm going to talk about the types of trades like that, and then I'm going to talk about how to get into those trades, and then how to manage them. And then next week, we'll likely dive a lot deeper on managing the trade, and then what to look for while the trade is open. And then we're going to talk a bit about journaling, which I think is, if there's a holy grail, that's probably it. So I know I said last week the holy grail is wanting nothing, and that's also true. So look, oh, well, we broke below the CP over here. Okay, but did we break over here? No, we didn't. And this is one of the nuances and one of the exceptions to we're holding. Is this any kind of a problem that we probe down here like this? No, there's no problem here, none. In fact, in MAP, I even said, look for a long in this 88 area and your risk around 86. That swing low is 85.25. Why did I say 86 area? Because I didn't know what tick exactly, and I was 3 ticks off. That's why I said 86 area. And I'm hoping that this is going to be real helpful in you seeing when to trade and when to put the trade on. Now, let's talk about one of the myths of trading, that when the market's doing this, when the market starts, let's jump over, I think, and look at a 1-minute chart and see how that looks when it spikes down there. All right. So at one point, you guys can see this here, right? At one point, this is a big blue candle I know they're probably red on your chart. There's a reason they're not red on my chart. One of the conversations I had with Denise Scholl, who wrote Market Mind Games, a lot of their research shows that red makes people more emotional. Green makes people more creative. Neither of those are things I want to be when I'm trading. I want to be very laid. This is about as excited as I get right now. And for the most part, I'm very even, easygoing. If you listen to the podcast with Ty, it's very good for going to sleep. You've got me and you've got Ty, and neither of us are very exciting people. You know, but you can just kind of get the sense of, okay, yeah, you know, trading should be real boring when you're doing it the right way. But I want to make a point here. When this is so important for trading. When the market there's this sell-off. Remember, you got to remember, I doubt you're looking at this individually as one candle. I guarantee you're thinking, well, remember what happened yesterday when the candles started looking like this. You know, the market went way down. Maybe this is that again. So this is a big blue candle that starts up here at, what is that, 94? And at one point is all the way down here, solid blue, nearly about 9 points. Now, I can't see the comments right now, David, but I really want to know. And Dawn, don't cheat. And the people that I've taught this to, don't say anything right now. But I really want to know who's really excited to get long right there. Who's thinking, what a great buy opportunity? Really? You know, you got a 9-point 1 minute candle that's this big red candle or big blue candle. Who's really excited about buying? Anybody?
Most people are saying no.
Why?
Except the Duke. Duke wants to.
I said that he doesn't count, so you can delete the comment. Yeah, look, why? Because I'm just going to say it as straightforward as I know how to say it. You're not present with what's happening in the market. You're trading based on some fear of something that's going to happen. Imagine that we were watching a chart of this, and I don't know, let's say that it was like the price of a Mercedes-Benz. Okay, and you're watching a chart, and all of a sudden, the market drops like this. What are you thinking? David, I mean, what are you thinking? You know, you're watching the price of Mercedes-Benz, and you're in the market for a Benz, and you see the price drop like that. What are you thinking?
I want to go buy a Benz.
Yeah, I'm going to buy 2 of these things, 3 of them, 4 of them, 5 of them. I'm going to sell all but one of them, pay for the one that I'm going to keep. Any other real asset or real commodity, you would be thinking, oh, that's on sale right now. Real estate goes down and people go, real estate's on sale. The stock market goes down and you're like, that's it. I knew it. It was a house of cards all along. The whole thing's going to collapse. This is the beginning of that. No, it's just a little retracement. And guess what? Guess who else is, and now I'm describing retail traders. So what are retail traders doing? Because nobody's thinking like, this is fantastic. I can't wait to buy this when it comes down here. Not retail traders anyway. So what are they doing? Well, they missed yesterday. You know, they didn't get any of the short yesterday, and they're not going to let that happen to them again today. So what are they going to do? They're going to get short. And what do you think all the big institutional traders are saying? Yeah, please go ahead. We'll take those contracts. Absolutely. So what happens? We get this hard spike down. Now, here's what you want to look for when the market is coming into a level. And I've said this, and if you pick up on the nuances of it in the live trade signals, you want it to spike into the area that you're trading. And we've seen.
Say that again. I think just say that again. I think it's really. I don't think people really pick that up. It's a really important thing.
If I said you want it to spike into the level, but you at least want it to move very quickly into the level. Now, why is this happening? Why is there a 9-point candle dropping right here? What's going on in the market is there's no buying happening. Why? Because the buyers are down here. You know, this is not my first rodeo. This whole area that we were looking at buying that I pointed out way before this happened. This is because, okay, that's where the buyers, if there are going to be buyers here, they're likely to be in this area. So there's no buyers in here. That's why the market can, if you've seen this, some of you might use order flow, or there's a product out there called Bookmap, which is like, you know, shows like a visual heat map. And what it looks like, I don't use Bookmap. I used it for 4 months. I didn't get it didn't help anything for me. I can determine all of that ahead of time before it ever happens in the order book. So what it looked like in Bookmap was basically you'd get like these areas where there were no orders, and it would look like a vacuum, and you could just see price was going to go like get sucked into the vacuum to wherever there was liquidity. So in essence, the market is a liquidity finding machine. The big institutional traders need buyers to sell to them so they can get short, and they need sellers to sell to them so they can buy. That's what this is. You think that this is I mean, look, I mean, we literally said, just for the record, let's go back and look for the record here so we can see right here, right there. That was at 8:19, 88 long. Okay, now that happened an hour and 10 minutes later. And you think this is coincidence? No, this is textbook. You should print this out and look at this. This is textbook what you want to see when you're trading. You want to see the market come into your level. If it's a good level and you validated it as an area that you want to trade, you want to see the faster the market comes into that level, the better. And we have a scoring system that we're going to be rolling out for this, but this would be ideal. This, if I was giving this a score on 1 out of 10, this is a 10 out of a 10. The faster and the harder that it comes into the level, the better. So let me jump around here for just a second, and I want to talk about what happened in the live trade signals this morning. This was a good move into this level where we wanted to trade, and we wanted to trade here. I think we were trying to trade 92, and the market spiked to 91.75. And I said, and then it pulled back like this, and I said, okay, that's that. You know, cancel the trade here at 92. Why? Because how's it going to spike? What is a spike going to look like? It's already at 91.75 right here. Even if this spiked, it's going to spike up through here. So that's exactly what happened later on. You get a spike up through here. So if it does this and it stalls, it needs to spike back into the level for it to really be, you know, the first type of, we're always reversal trader. We're always trading, looking for a reversal, okay? And what I mean about that is that if you haven't noticed yet, we only put limit orders above where the market's trading, and we only put limit orders to buy below where the market's trading. So we're always selling above where it's trading, and we're always buying below where it's trading. And now that doesn't mean we're not buying with whatever you might call the trend, or we're not selling with whatever you might call the trend. It just means that we're always looking for the market to turn around. Why? Because it's the trade that we can get with the least amount of risk. If I can get, even over here, let's say, if I get short right there and it spikes right there, now I have a defined risk right here, okay? Anyway, this trade ended up not playing out, but that's why. And then we wanted to sell, I think we were trying to sell 96, and it came up to 95.25 right there. And you can see this is not a spike. This is not a hard move. This is a great move. And then this is obviously not a reversal. This is not what a reversal looks like. This is what a reversal looks like. Now, it can look a lot of different ways, but I mean, this is what a reversal looks like. So here's what I watch.
A couple questions are coming in. Just, I think we'll capture a few of these with these questions. Is that So one is, how are you identifying the areas? Let's just use it as a buyer here. So you identified this area as 88 to 86 as a buy area. And then two, you know, are you typically entering in a market order, or do you have a limit order sitting there? How do you typically manage that type of trade entry?
Okay, so two questions. So how am I identifying it? And then how am I entering it? I'll talk about in a minute, but how I'm identifying it is really actually pretty simple. I'm looking right here and I can see, so same idea right here. So you see how here we have this CP at 88.75 right over here. Let's look at this part of the chart. Let's blow it up. So right here, we have the CP at 88.75, and we have this move down right here at 90.5, and this move down right here at 90.25. Now, when the market comes back here, this is game theory. I think, did I talk about, I talked about this in one of the videos that I did. There's this episode of The Simpsons. Lisa and Bart cannot agree. There's a video, they go, the only way to settle this disagreement is a game of rock, paper, scissors. So Bart thinks rock is strong, it's going to win. Lisa, it shows her in her mind, she's thinking Bart always does rock. So I'm going to do paper. So Lisa does paper, she wins. Bart does rock, he loses. Bart's playing rock, paper, scissors. Lisa's using game theory. So part of this, I'm thinking, I think that's a bigger part of, until I really started teaching years ago, I didn't realize what a big part of my trading philosophy and methodology that was, is thinking about what are other traders going to do, and then trying to do what the big traders are going to do. And it's like this, if you are struggling as a trader, just do the opposite of what the normal you would ever do. I know that sounds a lot easier to do than it actually is, but I'm looking at basically right here, I'm seeing there's this 90.25 and there's this 88.75 area, and I'm thinking that's not a lot of room. If the market's really going to spike down in here, that's not a lot of room for it to spike down right to here. And it really would be okay to spike down into down into here. This is not really enough room to spike anywhere. So I'm thinking, and remember, I posted that at right about right here. So I'm thinking, even if it spiked, like let's say right here, this is just not going to be enough room right there to spike down into that level. So I'm looking over here and I see there was all of this over there, and it's like, that'd be great if that held, but that's probably not going to. And I saw this swing low right there at 86. And if I look at a 5-minute chart, where is that? So right there, I've got 80. I think that's 85 is the low of those bodies. Ideally, if I have the account size, the way I'm going to trade this is I'm going to get long wherever I am going to get long in here. And then I'm going to put my risk below over here. And some of you maybe can't take that kind of risk. And I try to avoid taking that kind of risk in the live trade signals because it might not be realistic that you're going to take a 6 or 7 or 8 point risk. And, I only will do something with big risk like that if I really think it's going to pay off. If it's really worth putting that kind of risk on. This seemed a bit sketchy at the time, but basically, let me show you what I would do. I would draw something like this, and I'd be looking for a reversal in this area. And all I did is just from here basically down to kind of the body of those candles, okay? And then what I'm looking for is, okay, here you go. There's a hard spike down into this level. Now, one of the things I was thinking about this, and one of the things that I can probably do a better job of doing on trades like this in the live trade signals, I'll think, well, I don't want to take it at 88 because that's just too much risk to put your stop down here at whatever, have 3 or 4 points of risk. I don't want to do that. And I'm open to changing that, but I've been trying to keep the risk smaller. And one thing I can probably do better is we could just say, well, let's just put our entry lower where we could handle the risk. And if we get it, we get it. And if we don't get it, we don't get it. And so, I can do a better job of that, and I'll be thinking about that going forward. But that's basically what I'm looking for. Now, how I personally trade this, I want to spike into the level. This is like Christmas morning. This is better than Christmas morning for me. No, it's about like Christmas morning. I like watching my kids open their presents and stuff. And so basically this thing spikes down in here and I'm thinking this is the easiest money you're going to make all day. You know, this thing spiking down into this area that I'm paying attention to. There you go. If you're comfortable, you can catch it on a limit order here. So I'm watching, I've got the dome up. I'm going to snag it with a limit order somewhere in here. Okay. If you miss that, and that's a little bit advanced. So, you know, when I say in live trade signals, well, it takes a little bit of, you know, that'll take some advanced trade management skills or something like that. Well, there's another kind of a trade entry you could do where you could, so a few ways to trade it. One, you just put your order in. You put a limit order in and you let it sit there. You say, okay. And then that's that. And you got to take all this risk. The other way to trade it is, you know, this is the area you're looking for, and it comes down into the area. You see this really hard spike, and you're able to grab it and, you know, get long somewhere in here. The other way to trade it is you see this and then this big move back up here, and then it comes back down right there. Get long right here. You know, it comes back up here, put a limit order here. There's your limit order. Give it a couple points of risk, and then there's your trade. Now, here's the problem with both of those. They require discretion. And if you don't have your head right, meaning if you're having a conversation with yourself while these things are going on, don't do either of the things I just described. Because you will talk yourself into and out of the trade, and this will likely end up, you'll probably lose this trade and you'll probably lose this trade somehow. You know, because it really does, if you're doing something that requires a degree of discretion, you have got to make sure that you're actually trading what's happening in the market, not the conversation that you're having in your head about what's happening in the market. There's a really big difference between those things for most traders.
And you got to get really present to that. That's
yeah, look, I mean, it cannot, as far as I'm concerned, and what's his name? He's the founder of Tastyworks or something, I think. They're like a big options place right now. He says that trader psychology is bullshit. Those are his words. He said it's that the trading gurus came up with that because, you know, to make money. He's right. As long as you're doing something that's 100% mechanical, that has zero discretion, you don't have to worry about any of what I just said. But if you're wanting to be a discretionary trader, and that's what your thing is, that's what you're doing, you're going to be a discretionary trader, you're going to be watching this, and you're going to be watching, okay, the market's coming down in here. If you, and then you're deciding whether you're going to put an order on or not put an order on, and then you're deciding it comes up here, maybe you cover some of it, you know, that's a decent move. There's 5 points. I'm going to cover some. I'm going to buy some back 2 or 3 points lower. That is such a high level of skill to do that. And you can't do that if you're having a conversation with yourself about what's going on. You will miss the whole thing. There's an element of being in the zone like a professional athlete. And you want to see, you know, when you can tell, if you watch sports, you watch professional athletes, you can tell when they're having a conversation with themselves. There was a great video of, and by the way, I know we're at our time, and if you have to go, that's great. Thanks for being here. We'll circulate a recording, and I'm not going anywhere right now. So and you know, if you have to go, we're going to get you out a recording anyway. So,
hey, Ethan, I just want to call. I have a hard stop at 2:30.
Great. I think we'll wrap up before then. So I want to make sure that we get across the points that are going to be most effective before we move on for the rest of the week. So there's this video of Mark Zuckerberg, and he's testifying in front of Congress about, you know, privacy and whatever. and they ask him a question. They're having some conversation with him, and he's fine. And then the conversation turns to privacy. And I got to go find the video and post it in our Discord channel. The guy, you would have thought that he was like sitting in a furnace. His face is red. He's dripping sweat. He's chugging water. He's loosening his tie. What is going on? He's having a conversation with himself about the question about privacy. That's what's happening. The market is always neutral. It has upticks and downticks, and they mean nothing. If you are long, somebody's short. If you are short, somebody's long. It always works that way. It will always and forever work that way. The upticks and the downticks mean nothing. They're meaningless. If you make them mean something, you will have the hardest time as a discretionary trader. And your best bet, if you're unwilling to deal with your unworkable behavior about that, your best bet would be to have a completely systematic approach that's 100% mechanical, that requires no decision making from you, because you will suck at it. And there's just no two ways about that, and there's no nice way to tell you that. I just told you the nicest way to tell you that. If you won't deal with your own nonsense that comes up when you're trading, don't be a discretionary trader. Trade mechanically with a system that you don't have to decide anything. Okay, that's what you should be working on developing. But when this market comes down here and you're thinking, oh, remember yesterday, you know, it ended up just tanking and this is moving really fast. I don't think, if you're listening to what I'm telling you today, when this starts happening, you're going to be thinking, ka-ching. And Don can verify that. I'm not sure if he's on here, but he'll definitely verify that.
He has.
Yeah, this is the money maker right here. Because retail traders are going, oh no, I don't want to get long here. Yeah, okay, that's fine. Don't. It's more for the rest of us. Okay? So but you can't do that if you're having a conversation with yourself. So I'm going to give you a really useful tool. This really works. The secret is you actually have to do it. You have to use it. It doesn't work if you don't use it. It's funny like that. This is dropping and it's coming down here and you're thinking, oh no, I don't want to put this trade on because it's going really fast. And what if it turns out to be like yesterday and I end up getting stopped out? And then, you know, or what if it stops me out and then works anyway? Let me tell you how you deal with all of that. You just say, not that. And you go back to being present with what's happening in the market. Not that, and you go back to being present with what's happening. Okay? That's how you deal with all of that. You do not have to guess anything or forecast anything. You identify where you want to put the trade on, and then as this is happening, and it takes practice, and I promise you can master it and get good at it. I think of the people who stay with us for about a year, like 90% of them are consistently profitable. That's not a promise or an earnings promise or anything, something like that. My regular disclaimer, you can lose all and more than all of your money trading futures. It's inherently risky and no one should do it. So this is one trade. You put your limit order in here. That's that. You got to take the risk that goes with it. Other trade, you put a limit order, you watch this, it comes down in here. You can see the price action start to slow down. You already know you want to trade in this area. What you want to see is if you were watching volume, which I don't do, but I'm trying to describe to you what it looks like in the moment, you're going to see a lot of transactions. I posted a quote, I think, from George Soros. He said that volatility is greatest at turning points and diminishes as the trend gets established. So what you're going to see is sort of an increase in volatility, an increase in the velocity of which orders are coming in and out of the market. So you're going to see a lot of contracts getting exchanged really quick, and the market's going to sort of look like it's jumping around. And that better result in a reversal in an area like this, or you better get out of the way. Those are, you know, one of two things. So when this thing's ripping down here, you have all these traders who are short and selling, and what starts happening is all the big institutional traders are stepping in and picking up those orders, and you just have to watch it. You have to train yourself. You have to go back and watch it. You have to watch it in real time. and you have to see these orders coming into the market, and you can just see it. I'll give you an example of this from yesterday, but you really will get to where you can see it. When you've identified an area like this and you're going to go, that's a reversal. Now, maybe you put an order here and you miss it or you don't get it or whatever. I'd be careful using a market order because this can jump and now all of a sudden you're 3 points worse than where you wanted to be. So that can happen, but you can always get a trade here. So this would be like sort of like a confirmation entry. This would be so nice to do, and I can't figure out how to make it rule-based in the live trade signals. But this would be so nice to do on some of our live trade signals trades where we get a push down into the level, a back up above it, and then we want to buy with our risk down over here. Now we have defined risk and we can trade over here. This one, buying it down here, that's probably the highest level. Just putting your order right here, that's probably the beginner's area. That's where we are with live trade signals. This is probably, you know, waiting for that, and then this back up here and then back down there. That's probably, you know, kind of the intermediate in between there. You're not going to get, this is going to be your lowest risk trade. You're going to have almost nothing at risk, but you're going to lose some of these. And then this is going to be, you know, a little bit higher risk because you have to give it all the way down below here. So, but what you have going for you by this point is this confirmation that's happened right here. And then just so that we can sort of finish by stating the obvious here, and I want to show you something from yesterday. 1475, the swing high, 1675. So it went to the CP. What did we say? We said this is a congestion area. The checkpoint is up at the up here at 1475. That would be the next area if they can break out above there. This looks like a breakout. This, boom, there you go. Now, by the way, maybe you missed that. Look at that. You can buy it there. Oh, this is important. Now, I don't want to, and we're going to wrap up here in just a minute, but I want to say this. Why you would trade a level more than one time would be because of a move like this. So if this didn't spike all the way down here like this, let's say it only spiked to right there, I might go long if it came back down deeper into the level over here again. Because there were all these buyers, and see how fast this reacted out of here? I might buy it again. So see how this came down and just sort of like touched, boom. Well, what if I wanted to trade here? I maybe didn't get a lot of opportunity to do that. We're still in this congestion zone. It finally breaks above there, but see, it's using there, 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 and then off to the races. But this congestion that we had basically all morning, that was all forecasted here in prediction points with this congestion zone. And then of course it moved up to the checkpoint, probed above it a little bit, and then a fairly decent retracement so far. So there you have that. I want to show you one thing, and let me jump over and show you from yesterday. You know, in the live trade signals, we tried a long at 50, I think 51.50. And let me show you how I personally, so that'll give you some idea of what I'm doing. I mean, this is for if you're trading prediction points on your own. I'm trying to teach you how I'm trading them. But also, I'm trying to show you, you know, what, let's see, here we go. I'm trying to, you know, in the live trade signals, I also want to show you. So look, this is great. It comes down in here, it spikes down into this area. This is really nice. It moves very fast into this area. That's totally what we're looking for. It just moves like 6 points too far into this area. So, okay, it came down here, came up here, came back. I bought it right there. I didn't actually buy it over here. When it came into 51, there was no, I'm looking for that like hesitation. And I don't know how to describe this or how to teach it even that well. I'm telling you, if you go watch it and you spend as much time watching it as I have, you'll get good at it. But I'm looking for hesitation. There was no hesitation here. It just went right through there. So I don't just have an order sitting here. I didn't get long over here when it came back right there. This happened what seemed like too quick for me. And then when it came up here and came back, and I ended up getting long right here, and that worked for 20 points. That's why I said you can literally be wrong. I was trying to get short here and it didn't happen, but you can literally be wrong and then that go 20 points. So yeah, and there's, for the record, there's the low to the tick. So we're below. Oh, we'll cover this a little bit more in detail, but look, we basically, as long as we're below here, we can be sellers. So there you go. It doesn't come back up above there. I wouldn't sell that again a second time, but I would be willing to sell here and here on a move back up here right there. And then that didn't happen. And so there you go, this selling down here. Okay, that broke, great. I can sell down to here. We have a product called Key Turns. I think, there it is. It's literally lines that you put on your chart, and these will tell you, you can see we probed up above key turns over here yesterday and then hard sell off. Basically, it's a way that we determine the bias, the trend of the mark. You can see it tested right there. A lot of times that happens where it tests to the tick and then we'll take off or come up and test it. Anyway, we have a trader using just key turns. You get this, just using key turns. And the way he trades it, I know you're going to email and ask us like 50 questions, but this is literally the answer. He is long above it and short below it for the next one. So if he's long here, so here he would have been long above these two for going up to that one. So he might have switched short right there on a head fake and then gotten long again right there when it went back up there. And, you know, with making, like, having 40, 50, 70, $80,000 months. Long above, short below it. I mean, it's ridiculous. So if you took that same approach with CPs and just didn't overcomplicate it, you know. So look, that probably brings up more questions than it does answers, which is great. And we're going to dive into more of the trade management. So what do you do in these kinds of situations? We'll dive into that more next week. And you know, we'll get this recording out to everybody. David, is there anything you want to say to wrap us up?
No, I think that's it. I think, you know, if there are questions that haven't been answered, you can feel free to send an email to support@daytradelikeapro.com, or, you know, even better, post them in the trader chat or question and answer section in Discord, because we will address them there. Again, we want to make sure that everyone gets all of their questions answered so that they can understand this as much as possible to see if it supports their trading. So
if you put your trades or your questions in the trader talk, just make sure you either do @DTLAP or @Maverick, and we'll get your questions answered. And then if you put it in the questions and answers for Live Trade Signals, I'm always checking that, so we'll make sure we answer those. But that would be the best way to get your questions answered so that others can also learn from your questions. So
absolutely.
This will be ready sometime this afternoon. We'll get it out to everybody. Thanks for being here. Thanks for taking the time out of your day to be here. And hopefully what we covered here today was useful.